Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. Today, I wanted to talk about gold and the various cryptocurrencies and how they are as an investment. I will use Bitcoin as an example of cryptocurrency. Also note that the blockchain technology used for cryptocurrencies is a different animal than cryptocurrency itself, and I am not including it. At the risk of being unpopular, I'm not a fan of either gold nor Bitcoin as an investment. At the basic level, neither has any intrinsic inherent value. For example, land you can live on, build on, grow food on. Stocks represent the company's future earnings, possibly dividends, machinery, which has some worth, etc. There is intrinsic value there. Gold just looks pretty and shiny, but you can't eat it, and it doesn't pay you any dividends. It has historical value, at least. I once talked to an elderly gentleman at an investing dinner who told me that when you wanted to eat during World War II, you needed to have gold. Technically, you needed somebody who has food and was willing to give up the food for something that couldn't be eaten. You can make the case that if the world descends into chaos, gold will have some value, while stocks wouldn't. Other than in that scenario, however, gold cannot be used as a ready currency. Bitcoin doesn't even have that history of being valuable, and being digital certainly wouldn't be worth anything in a post apocalyptic Earth, where working computers would be rare. I see Bitcoin as somebody taking a piece of paper, tearing it into 1,000 pieces, and saying, each piece is worth $1. Somebody else says, I think it's worth two. And the third person hears that and begins to see the piece of paper as going up in price and is willing to buy it for three. Gold is seen as a store of value, an inflation hedge, meaning it goes up with inflation and safe. When there is fear in the regular stock market, investors tend to pile into gold, which makes it go up. Once they feel safe again, investors go back to stocks. While gold sometimes, but not always, rallies during stock market downturns, it tends to lose those gains again during better times, and it is range bound between 1,000 to 2,000 USD per ounce in the last 10 years. Gold is also often driven by speculation, and then it sells off when the speculators are afraid to lose their money. My theory is the lack of intrinsic value I spoke of and the lack of dividend payments that cause this. As far as an inflation hedge, gold actually doesn't work that well. For example, taking inflation into account, the gold price stumbled 83% between 1980 and 2001. In general, as you can see in this graph of long-term returns of gold versus the Dow Jones Industrial Average, the stocks went out easily. About gold, Mike Coop, portfolio specialist at Morningstar Investment Management, says, quote, people have a deep-rooted emotional response to gold. You can see that in how we refer to it in everyday language. Good as gold, gold-plated, gold class. We think of gold as safe, secure, and as being the best, and that impacts how people view it in investment terms too. Gold does do well if there are low interest rates because holding gold doesn't pay you anything to hold it. As bond yields and interest rates go down, opportunity cost to hold gold is less and may become positive as you get negative interest rates, and therefore the price of gold goes up. Gold is seen as safe. Bitcoin, by the way, is not. But actually, gold is quite volatile. The US S&P 500 index has a standard deviation of the price, think of it as volatility, on an annual basis of 15%. Gold is 13.1%, so not much less, but Bitcoin is in the 30% range. Gold and Bitcoin are just a different type of asset, but definitely not safer. Because gold and Bitcoin don't pay any dividends or make a profit or a loss, their price is only determined by investor sentiment. So I would call them speculation, as per a previous video about the types of assets. If it is in demand, the price goes up. If it is out of favor, the price falls. Mike Coop once again echoes my point of view and says, quote, that means you're simply relying on other people to be prepared to pay a higher price for an asset than you did. Alternatives to gold might be government bonds, which, while they don't pay much, are quite safe since the government can print more money if needed. If you want to be near gold, gold mining stocks might be considered, but I have to admit they've been a pain for me. To summarize, gold and Bitcoin may be seen as alternative investments, perhaps one that are not correlated with the stock market, but I don't see them as inherently good investments. But I don't find them particularly good investments on principle. That doesn't mean you can't make money using them. I've also heard experts say everyone should have 5% of their portfolio in gold, so you should make up your own mind. As far as Bitcoin, I don't own any and never have, but some big investors will put a little money into it. Why not, right? Please leave me your thoughts in the comments and feel free to start a debate. Investing is all about opinions. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.